Hello everyone, it's Friday, October 17. Today we're analysing the euro and British pound charts to identify potential market trends. Both currencies continued to recover against the US dollar, buoyed by recent economic data and shifting rate expectations. On Thursday, the UK reported GDP growth of 0.1% for August, a modest rebound following flat growth in July. While the figure suggests sluggish momentum, it is broadly in line with expectations given the challenging global environment and the Bank of England's persistently high interest rates aiming at reining in inflation. In addition to the GDP report, the UK also released better-than-expected figures on industrial and manufacturing production. Together, these data points signal that the British economy remains relatively resilient, providing a degree of support for the pound, particularly as the Federal Reserve continues to guide markets toward more accommodative policy. With another rate cut already priced in for the Fed's October meeting, market participants are now weighing the likelihood of one or even two additional reductions before year-end. Uncertainty over the trajectory and pace of US monetary easing continues to weigh on the greenback, which is extending losses across major currency pairs. Now let's take a look at today's macroeconomic calendar. In the first half of the day, attention will be on Eurozone consumer price data. Headline inflation for September is expected to hold steady at 2.2%, matching the preliminary estimate, while core inflation is projected at 2.3%, hovering near the European Central Bank's 2% target. Given recent ECB commentary emphasizing the need to keep rates on hold, today's inflation figures are unlikely to shift market sentiment unless they gradually deviate from expectations. In this context, the euro has room to extend its recent recovery. Market participants will also be closely watching remarks from key policymakers, including Bundesbank President Joachim Nagel, Bank of England Chief Economist Hugh Peel, and St. Louis Fed President Alberto Muslim. These speeches may offer insight into future policy directions. Meanwhile, due to the ongoing US government shutdown, no major US economic data releases are scheduled. This leaves the dollar with little support and vulnerable to further downside pressure. Turning to technical analysis, the 1-hour EUR USD chart shows that a decline followed by a false breakout at 17.15 would generate a sell signal, dragging the euro down to 16.79. A break below this level would lead to a drop to 16.44 and probably open the path towards 16.14. At this level, I would recommend going long on a rebound, targeting an intraday correction of 20-25 pips. Long entries at 16.44 and 16.79 could be set on a false breakout. Alternatively, if the price breaks above 17.15, a buy signal will trigger, with the euro rising to 17.46 and possibly extending gains to 17.77. At this market, it would be prudent to go short on the rebound, counting on a 25-30 pip move. Going short at 17.46 and 17.15 would only be relevant following a false breakout. As for the British pound, the market situation is similar. False breakouts at 34.88 or 35.25, a 1-month high, would make it possible to sell. In case of a strong bullish move, short positions on a rebound would look attractive at 35.67, aiming for an intraday correction of 30-35 pips. Long entries would be relevant at 34.49 and 34.06 on a false breakout, or at 1.3371 on rebound, in anticipation of a 30-35 pip move. Good luck to everyone. Have a nice weekend.